All right, hello everyone. Welcome to the NinjaTrader Ecosystem webinar room. Before we do get started, I want to take a moment to test for picture and sound. If you can hear my voice and see the projection in the room, if you would just type in where you're joining us from today. All right, so I think answers are going to come in, and I'm going to address these here in just a minute. But I want to thank everyone for the confirmation. We have folks from all over the world joining us. I see the UK and places all over the US. Canada is here. Los Angeles is here as well. And again, thanks for your confirmation. My name is Jared Meyer, and I work on the NinjaTrader business development team here at our Denver office. We have a very special event for you today with yet another Jared Putnam from TradingSUPRA. So while we're getting settled in, I do want to just conduct a quick poll for everyone there. If you would just please choose number 1, 2, 3, or 4 on the poll screen. That will let us know what type of NinjaTrader users we have in attendance. Everyone's welcome, but we always like to know who's joining us today. While you fill that out, I would like to mention that it's important to understand that there are substantial risks in trading commodities, futures, contracts, and Forex. You should carefully consider whether such trading is suitable for you, and that will depend on your specific circumstances and financial resources. It is, of course, possible to lose all the funds deposited with your broker. You could even incur losses beyond these amounts. Please inquire at a link here I'm going to provide for more information or a copy of the CFTC full risk disclosure. Also, please do remember that trading webinars are not a solicitation or recommendation, but simply educational in nature. One more thing to note here, that this presentation is presented by NinjaTrader LLC, which is a technology company responsible for developing and supporting the NinjaTrader trading software. Brokerage-related questions should be directed to NinjaTrader Brokerage directly. I'll give you a phone number here in just a moment, and I'll give you an email address as well. So there's a phone number there. There's also an email address. I apologize that they're a little bit jammed together, but I think you guys will be able to get through that all right. All right, so poll results. Looks like we have about 20% of folks here today that are using a free license key, so thanks for joining us. A big chunk of you, about 44% of the people in the room, are using a lifetime license key. We appreciate you being here. Thank you for attending today. We've got a few people that are leasing a live key, about 10%. And we have a nice amount of people, about a quarter of you, are not yet using NinjaTrader. So if you're one of those folks that have not yet done so already, I definitely encourage you to download NinjaTrader for free. Here's a link to do that. And for those of you that are maybe using NinjaTrader in Sim or have not purchased a key, there's a link right here for you to purchase or upgrade your current subscription. All right, so we've got all the good stuff out of the way here. And now we are excited for this unique event in which Jared Putnam of TradingSUPRA demonstrates how understanding what drives the market will help you find order flow-based trades in real time without having to be perfect. Thank you again for your attendance today. Without further ado, it is my pleasure to welcome to the NinjaTrader webinar room, Jared Putnam. Please take it away, Jared.
Hello, everyone. Hopefully you can hear me, and hopefully I'm not too loud. My name is Jared Putnam, and I appreciate you being here. And if you could, sound is good. Thank you, Wayne. I'm just going to put this in. There's a link. If you're interested in the free offer, there's a link that you'll have to use in order to claim that. And so just wanted to get that out to everyone right away. And then also, throughout the time that we'll spend here together, okay, just a little bit louder maybe. Great, thanks, Jared. That's just an email that you can send, you can use to send any questions that you might have. All right, and so let's talk for a moment. I just want to give you a little bit of background as far as what it is that I've made and what it can do. A brief story. Years ago, I was learning market profile, and I was in awe of how great it was to be able to see the underlying structure, to see very reliable zones of support, very reliable zones of resistance, but I was still having trouble and the mentor that I was working with at the time, he said something that kind of sparked something in me. I said, you know, this looks good, that looks good, this looks good, but how do I know if I should take the trade or not? And he said, Jared, you're never going to get a sign that says now's the time to enter. And that stuck with me, and I thought to myself, I don't know if that's true. I felt like there has to be some structure, some sequence, some order to turns in the market. That each turn, of course, they're different, they're all unique, but there has to be an underlying consistent element present when the market is pushing up and then stops pushing up and then instead pulls back a little, and instead of continuing to push up is unable and continues back and reverses. And so that sparked a big investigation effort on my part, and along the way I had also learned, I had already actually been introduced to order flow back in 2005. And so between those two events, I had enough order flow knowledge to investigate it, and then was sparked by this notion of thinking, well, maybe there is an underlying assortment of elements that I can identify, and then if I can identify a sequence of events, then maybe I can in fact have what I was told I can't have, which is a sign that tells me, hey, the market is in a position to make an adjustment, and it doesn't have to be a huge move if you trade it for any length of time. That's kind of the idea behind what I made. And these three items here that we see on the screen, trade reality, trade repeat scenarios, and learn how to leverage what you know, those are really core beliefs that I've adopted either naturally or after losing a lot of money and realizing that, hey, you're doing it wrong, it's time to adjust. And so between all of the adventures and misadventures I've had since I started trading in 1997. All right, and so belief number one, we'll just talk briefly about these beliefs and how it can pertain to, first, knowing what actually happens. I remember when I started trading, looking at the market and getting very excited about all the money you can make, but if someone asked me, well, what really makes it tick? I really didn't have a sensible answer. It was more so just a collection of things I had heard. And so one of the main things in trading reality is we have to be able to clearly define how does a price change. A question you can ask yourself is, am I able to locate where a market is likely to turn? And then lastly, do I understand when a market is ready to move? And these are things that through lots of effort I've learned and eventually then programmed into some algorithms that can automate some of the difficult high labor portions of trading order flow, and it kind of takes some of the work out of that. And so let's go ahead and advance the slide. Oops. So first of all, how does price change? And some of you may know this. Some of you may, kind of be where I was at one point, which is perfectly fine. You're interested in trading. You know you have a knack for it, but some of these finer points of, well, what enables the market to move, you may not know. So this might be new information for you. So essentially, just this slide describes how price rests on market order consumption. So we've got the price in the center, and if 797 market orders on the right-hand side there are consumed by the bid, the price will go up, and that's it. If 813 market orders are consumed, excuse me, I said bid, I meant offer, so from the bid side going into the offer. Now we're talking about if the price goes down to 86.5, that means 813 of those market orders or willing participants right there at 86.5 have to be consumed in order to make the price go lower. So price rests on top of market consumption. I always think of you go to a big football game and somebody brought a beach ball and they're hitting it around. If they hit it to a section where no one's sitting, there's no one underneath it to propel it upward. And that's in a similar way. There has to be bids in order to propel a price to even sustain it, let alone push it higher. And in order to push something down in terms of the market price, there have to be enough offers to keep consuming the bid and over-consuming what's available there and driving lower in order to find new liquidity. And so that's a brief description of the logistics behind the market. Now, where a market is likely to turn, there's a few different perspectives and many more besides that. A couple that I'm highlighting here today. One is simply based on support and resistance conveyed by price, in particular price congestion. And we've likely all of us have heard how obviously support can eventually become resistance, resistance can eventually be treated as support, and how we can find those locations, those potential future turning points, by looking at where either a big move took place or where simply a lot of congestion took place, where the market was evenly matched. The bids and the ask size, the consumption, the rate of consumption, all of those things were evenly matched, and so the market might trade sideways for quite some time. And that activity where a lot of transactions took place is a very, in the future, a very likely place to find the market will react again. It's not always the case, and that's where order flow can be extremely helpful. Like that was the issue when I was having that conversation with my my mentor at the time. You know, I was talking about, well, how come I find this great market profile level and then it blows right through it? And I was frustrated losing money taking trades at a level that was quote-unquote supposed to hold or supposed to garner a response, and it just simply didn't in certain cases. And you've probably found that in whichever you know, whichever approach you use, whether it's a moving average based support or any of the other combinations out there. You know, sometimes they hold beautifully and you can look back and you can say, oh my word, there's a half a dozen places where if I'd have gotten in there and gotten out here, you know, there's all kinds of money to be made. So that's where coupling excellent or even just basic, where coupling basic turning points with an order flow clarifier, with an aid that will help determine in real time whether or not the bid and the ask are cooperating with the premise of your trade. And by that I simply mean if you're viewing it as support, you can have the order flow tool that we offer, Fill Finder. It will look for a situation where the order flow is favorable for the market to lift, and trade it if it's there and not trade it if it's not there. But so we want to be able to locate where a market's likely to turn. You can do it with price-based support and resistance. It is repetitive, which makes it very useful. You can look at, and as you notice on this chart, you don't see a symbol. It could be any market. You don't see a price scale. You don't see a time. It's repetitive across all markets. And so it's highly, highly useful when coupled with an order flow clarifier. So now, continuing with regard to market profile, volume profile, I do use volume profile, and it reveals natural turning points like I've talked about. But just like I mentioned, similar to any support or resistance, sometimes it'll hold beautifully, other times, wow, it went right through it. I wonder what went wrong. Things don't necessarily go wrong. There could just be a higher time frame involved. That means a larger pool of liquidity that simply gobbles up the smaller time frame liquidity, and in the process breaks through what looks like a strong potentially strong support or resistance. But the market does repeatedly react at these zones. It doesn't always do it. As you know, if you traded for any length of time, the market does color outside of the lines. It is dynamic. Sometimes it will cooperate in a little way, sometimes perfectly, and all the way in between. But if you have the point of knowing where a market is likely to turn is simple. The point is, as traders, we need a steady supply of potential opportunity. If we have a steady supply, first of all, it enables our business to function. You have to have something to work with in the first place. On top of that, it can be a huge stress reducer, because rather than looking at a move and saying, if this doesn't work, my whole week is shot, or my whole month, or whatever, it can, when we know we have a steady supply, it can take the pressure off tremendously. And instead of trying to squeeze everything and second guess and should I stay in longer, should I this time, this time should I not move my stop, this time should I change my profit objective, all these bright ideas that I know I've gotten in the midst of a trade, and then I look back and I realize, wow, I left my stop at break even, I could have made X amount of dollars per contract, and now boom bam, it's back at my stop, tagged me out, and I made very little or nothing. Well, when you have a steady supply of legitimate, good, workable trade opportunity zones, that pressure can over time diminish, and you can then learn how to function being happy with this trade gave this much, and you move on to the next because you know there are many more to come. And so it's a huge, huge change in perspective over a little bit of time. It just takes a little getting used to. And so understanding when a market is ready to move up simply means recognizing that in order for a market, and now it's speaking specifically to timing, to know the right time, that sign that mentor told me, hey, the market's not going to hold up, a sign for it. This is the sign. Looking at the order book and recognizing when there's an imbalance, and not only an imbalance, but an imbalance at a relevant location at after a sequence of other events. So reading the order book is a lot of work and takes a long time to learn and takes even longer to master and is a nonstop challenge. But with tools that automate a portion of it, you can benefit from the timing aspect, that being aware of what's going on in the order book. The timing can be improved tremendously. The risk can be diminished because you can recognize an opportunity might only span a few ticks, rather than the way you might operate your business now is you might look at a zone and you might say, well, between this moving average and that moving average, I think the market's likely to bounce. Well, if it touches the upper of the two moving averages, you might put your stop below or above, just beyond the further moving average. So the risk might, let's just say, spans 12 ticks. Well, with an order book awareness, you might see that the opportunity that has developed in the order book might only span 7 ticks. So now instead of risking 12, you have a justifiable reason to risk only 7. And so there's, and that's just one aspect of the benefit of being aware of what's going on in the order book and relevant high priority items that are right there in plain sight if you can see them. But an example of the price moving down, and then here's my contact info. Just thought I'd throw that in just in case you have questions or in case you have to leave partway through. That's how you can get a hold of me in case you have any questions and you're not going to be around here at the end. So belief number 2, trading repeat scenarios. So trading repeat scenarios is essentially what we all do regardless of what our background is, whatever business we're in. That's how we make a living. That's how we win. We don't win reinventing something all the time. And with regard to trading, recognizing what we've talked about so far, first of all, zones where you're likely to see a response, coupled with using a clarifier like order flow, those two things together is a process that has a beginning, a middle, and an end. And it's learnable and it's repeatable. And so we want to use these to our advantage. We want to use an awareness of where the market's likely to turn, and then use the method of entry over and over again to exploit our edge, basically, putting it in traders' terms, to keep doing what works, as we say in the normal world outside of trading. We just we do the same thing day in and day out, whatever that might be, and that's how we make our living. And so for a greater chance of success, we want to learn how to find and trade price-based and volume-based turning points, and then how to trade bid-ask tipping points. Those are order flow events that are very precise and are automated, using the tools that I've put together. And again, that was just something that I was very interested in. Automation is something that I find highly useful. And so at SUPRA, we teach how to find and trade using natural turning points, what I call it natural. It seems very natural. It happens over and over again, and it doesn't take a miracle for it to work. And so at SUPRA, first, price-based areas, how to train your eye to notice these things just takes a little bit of practice, and it's something that we teach. And then once you learn it, it's something that you can see for the rest of your life, and it's something you can find on your own. You don't need anything, you have your own independence. And then with regard to, volume profile, we also teach how to use volume profile to locate turning points as well. And so, again, having that steady supply of opportunity zones, very important. Okay, and so just quickly here, looking at the order book challenges, you have to recognize a lot of changes. The change in the bid and the ask, the speed of that change, the price change, how if it reacts, how far does it react, things like that. And so things you have to think past. Okay, so I'll reminisce here for a moment. Trading the order book manually, I would watch the market. It would come into a zone that I felt very strongly was likely to, where I was likely to find a very nice trade. And so I'm watching the market. It gets into my zone. I see, let's say it's a support zone. I see the market slow down. It's not falling as easily. The bid is firming up, simply meaning the size at the bid is coming back. If the offer takes it, it comes back. It might grow a little bit. It might uptick. And so, okay, this is looking very encouraging. I then recognize, okay, I'm waiting now. Let's see if the ask can finally give up. Does it run out of steam? Do they have a pronounced effort followed by no follow through? Do they have just kind of a trailing off where they take the size, take the size, take the size, nothing drops, so then the size backs away? Things like that. So, okay, great. So I get in. The market cooperates 2, 3, 4 ticks. I move my stop to break even. Boom, I'm out. I'm stopped out. And the market drops a little bit lower. And now I think, boy, I really don't want to miss out on this. But I'm also thinking, well, what if that was a great trade, but now the level's not ready to go, and maybe this level is not going to hold. What's my next support? So while I'm wondering if this level is still actionable or not, in a very much quicker sequence, the bid ask, the bid replenishes again, the ask trails off, I watch it, but I wait because I'm not sure if the level is going to hold or not. It then barely cooperates, and I think, oh good, I'm glad I waited. And then I think I see something. This looks like, aha, this is the last gasp. I think I might get in. So then I go to enter, and up 2 ticks, 3 ticks, 4 ticks. Now it's off my price that I could have just gotten in the last 30 seconds, just sitting there staring me in the face. And now I don't want to pay 4 ticks more than what I just could have had for 4 ticks less, and so I wait and see, maybe it'll come back. It does come back 2 ticks, but I want more than that. So then in about 10 more seconds, it goes up 14 ticks, and I just missed my good trade. That messes with your head if you do that enough. Once is plenty, but if you do it day in and day out, and every once in a while maybe get a good move, or every once in a while lose, and after all is said and done, you're kind of not making a whole lot of money, that can mess with your head. You have to be able to think past getting in too early, waiting and chasing for a loss, missing out on the trade altogether. You feel dialed in, and then you take your exit at break even, things like that. And all of that I put in black here dwindles your confidence. And so the main point is trading order flow manually, while it's possible, it is learnable, and that's the fantastic thing about it. It can be a blessing, pardon me, but it has a steep learning curve and is still a lot of work once you have learned it. And so well, I'm happy if you want to contact me. Here's my contact once again. And so leverage what you know. Use a repeatable process, plus execute your trade using automation. That was what I've made, and here's how the basic controls work. You download Fill Finder. You have resistance zones, and so whether you're trading at your desk every minute of the day, and as you watch a market move, you think, oh, I think it might pull back to XYZ place, you know, between 8 and 10, let's say. You'd type in 8 at the zone low, 10 at the zone high, and click Activate Resistance. And then, and it's laid out a little differently, but then you'd go over to the Trade Quantity Control and simply fill in Quantity 1 and Quantity 2, how many contracts you want it to execute. And the difference between Quantity 1 and Quantity 2 is simply the profit objective used. That's it. All entry criteria, everything else is identical. It's simply, in a nutshell, a smaller target and a larger target. And then below that, you have the ability to individually close or close all of your position at any time, simply clicking one of those buttons. And then the same for trading at support. Market's pulling back a little bit into a zone that matters to you. And you can simply type in the zone high price is 11, the zone low price is 9.2. If it trades between 11, 9.2, or even goes below 9.2, Fill Finder will in real time read and detect order flow events that indicate, based on order flow, based on actual real-time trades and what's available right now, and will execute a trade based on when the timing seems highly favorable for the market to at least bounce in your favor and at least reach your smaller profit objective. It also simultaneously, when you're filled, puts in a risk, a stop loss. The stop loss, though, is custom tailored to each trade. And so if the ticks that span, the tick span that your opportunity might be associated with, it might be 11 ticks, well then your stop would be just beyond that 11 tick scenario. But then later on in the same market, in the same day, there might be a new scenario, and that one might span only 5 ticks. Well, your stop is dynamically sized to each individual trade scenario that triggers an entry. Same with your profit objectives. Those are not fixed. Those are dynamically sized in accord with each trade scenario. And the idea with regard to managing risk, you know, I've worked with a ton of traders, and so often the focus when it comes to managing risk is, where do I put my stop? Where do I move my stop? And so rarely is it the first idea. It's a great idea, but it's rarely the first idea, and I, myself included, when I started out, I was not thinking in terms of how soon can I take my profit. I was always looking for the bigger move, always thinking, well, if I only make $65 per contract on this trade, how am I ever going to, you know, how's that ever going to add up? Is what I used to think. Now I realize it can, and it does. You can just do it. You don't have to have anything in quantity 2 or anything in quantity 1. You can do it all lopsided if you want. You can control whether or not the stop goes to your entry once quantity 1 is filled. It doesn't have to. It can stay where it began. And there's other flexibility, other items that I've built into it. But essentially, the idea is going back to, let's see if I can jump back to this slide or not. There we go. Trade reality. So first, know what enables the market to move in the first place. Trade repeat scenarios. Trade scenarios that happen over and over and over again, so you have just a very good supply of opportunities. And so that's what you may already know. If you need help with that, I offer training to help you recognize and find where the market's likely to, at a minimum, slow down usually. But like I've said throughout, and you've seen it if you traded for any length of time, sometimes levels simply are ignored because a greater time frame is involved. So trade repeat scenarios have an opportunity to look at a lot of trades, and don't just get fixated on one thing and hope that it works and pin all your hopes and dreams to it. And then lastly, learn how to leverage what you know. So part of leveraging is what you know is already built into trading repeat scenarios. If you're doing that, you're gaining experience and gaining a specialized awareness which is a form of leverage. And then also just in terms of being able to trade and have the exposure to a larger pool of opportunities, by using Fill Finder, you can set those zones, and Fill Finder does not know if you're sitting at the screen or not. It will execute if you're up getting a cup of coffee or whatever you might be doing. It will still do what you told it to do, whether you're sitting there or not. And so one trader I just talked to the other day, he may be here today, I'm not sure. He trades the euro, and okay, great. He enjoys trading the euro using Fill Finder, and he does so manually. He trades off the order book, does so manually, and similar to what I was describing earlier. But now with Fill Finder, you can have the benefit of an order flow clarifier to help you with timing, help you with risk control, help you with profit taking. Taking profit at a sensible location rather than kind of a dreamer's location. And so now you can put that and load 2 charts, 3 charts, however many different markets you want to prepare and be aware of, and then you can simply manage, instead of managing each micro move and watching the bid and the ask on one market, you can then elevate to managing your Fill Finder entries and what zone now matters based on new forthcoming information, and what am I going to do next, and managing the tool that then micromanages the market. So it's just a little shift there. Hey, Chris. Okay, I was talking about you, Chris. And so essentially, that's what I wanted to share, and the viewpoints and different things that I had in mind. But now I'd like to know, first of all, and so if you want to have a consultation to find out, first of all, if you want to share what you're doing and see if this could fit in or augment or enhance what you're doing, then you can email me, or you can click this link. Let me see if I can do that. There we go. That's a feedback form / entry form for you to submit your information, and then I can reach out to you and give you some time and get to know what you're doing, and you can ask me whatever you'd like to ask and find out if this order flow clarifier, coupled with your current approach, or if you're looking to learn how to find repeatable trade opportunities, then I can help you with that, and then you can apply those to those zones. Had a question here about cost, and that is the link. The trade software it adapts, and so just like I was saying earlier, I trade EMD, which is on the thinner side, and then I also trade the E-minis, and I've used it in bonds, and so you can trade very, very high liquidity markets. I've traded Apple, Boeing, stock that just bazillions of shares. And you can also trade thin markets like EMD. Gold isn't especially thick. And so it's adaptable. And so you're able to use it in multiple markets. And then also it adapts to the time of day. And so if you have, it just maintains awareness of what's currently normal, and then works off of that. And so it's it's tuned in that way, if that makes sense. David, how would you obtain a copy from today's webinar? I think you'll get a link from NinjaTrader, but Jared, if Jared Meyer is listening, he can possibly type in or speak or whatever and clarify Jared, that. But I think.
Sorry, I'll just jump in there. So everyone that's registered and attended today, we will be sending out a copy of the recording of the presentation. Probably, I would think by Monday afternoon or so. We will do our best to cut out the audio dropouts, and that way it's a little bit cleaner presentation. But I'll turn the mic back over to Jared Putnam.
Yeah, okay, thanks. Thank you. It's like being in school, Jared, right? Jared M, Jared P, right? I had a question here from Ness D. Just to be clear, this is your question. Just to be clear, the tool generates support resistance zones automatically? Question mark. The answer to that is no. the support and resistance zones are entered in by the end user. And so it'd be by you or me. And so you enter in zones, and PhilFinder will then detect and read the order book for you. And if the trade presents itself according to the algorithms I've made, then it will take care of the entry, the risk, and the profit taking automatically. So you can apply that then. If you have an approach where it's a repeatable process, you can then look at a handful of markets or dozens of markets, however busy you want to be, and enter in those zones, enter in the parameters, telling PhilFinder, this is what I want you to do, this is what I don't want you to do. If this happens, this is what you do, which is just a matter of a few settings. So once you get used to those things, you can then have a different trading reality where instead of being glued to one market and all the second guessing that goes on with missing out and getting in too early, too late, and break even, all these different things, you can simply delegate that to a machine. And then your question goes on, Nesty. It says, in terms of trading stocks, how effective is the tool? It is highly effective in terms of recognizing when a market is ready to cooperate in executing those trades. Let me see if I'm missing any other questions or if there are any new ones. 1 second. VBC, you asked, do I have a trade room? No, I do work one-on-one with traders, but I don't devote the time to operate a trade room during the session. And so I'm glad I saw your question. That was from a little bit ago, and so I'm just scrolling back up. If you do want to see examples, just fill in the form. There's a link there. You can access it, and you'll be able to get a customized sample to whatever market you trade, or if you want to see something from what I've done, you can check that out as well. So let's see here, VBC, what are your trades today on NQ? NQ, sell zone, up around 68.25.5. Aware of that at 9:45 a.m. Eastern. So aware of it at 9:45 Eastern. And then the trade executed, though, at approximately 11:20 a.m. And so the market didn't revisit the zone for a while, but then once it did, as it turned out, PhilFinder recognized a shift in the order flow, executed, and that was a nice trade. And so that's the sell zone. Then I mentioned this earlier, but the buy zone in NASDAQ, 68.21 down to 68.12. Aware of that at approximately 2:45 in the afternoon Eastern time. And then a half hour later, the market revisited the zone at 3:30. And then again at 3:45, PhilFinder detected 2 instances that would trigger an entry. And so Sally M asked, can you show a chart from today? I have everything, like this whole thing's loaded into this presentation software. And so if you want to see an example from today, I will put it up on the YouTube channel, on our YouTube channel later on. And then also if you want one just customized, you can, I can send you one of mine, or you can let me know what market you want, and I can send you one, that would pertain to something you're familiar with. And we can, you can check it out. But yeah, if you fill in the questionnaire, then I'll have your information. I can get back with you. Or if you simply just want to see videos, the videos that I have on YouTube right now are all very brief and are without audio. They just simply show the software working. I thought maybe that would be just a straightforward way of going about it. And so I put this in earlier, and actually you guys see a lot less text than I do, so you might still see the YouTube link. So I'll put it in just to be sure. Okay, hopefully that will work for you. Someone said they can't open the questionnaire, so hopefully, Steve, that will work for you. Or, Steve, if you want to put your email in here, then I can email it to you. You did ask me to email the questionnaire. So if you want, go ahead and put your email in, and then I'll send that out to you, and I can actually do it while we're sitting here. Jack M., you said, is the software available for a one-time purchase, or is it simply the monthly that you have right there? I do also have, okay, great. Yep, Jack, I do also have a one-time purchase. It's approximately $1,500, but then it also has a annual $250 update fee, and so it's never a full, you know, there's always something associated with it, but if you wanted to just own it for the longer term, you know you're going to want it, you know you're going to use it, and you don't want to pay for it each month, you can just pay $1,500 and then $250 annually. All right, Steve, I'll get to that right now. All right, so I'm not sure if there are more questions. I have no pressing matter right now, so I can stay if you have other questions. Okay, Steve, you should see that in your inbox shortly. Gary, sorry I don't at the moment, but I can show you some. Gary asked, do I have a video showing it working on stocks? Gary, if you want, send me your email. I will make a YouTube video, but if you want, you can send me your email and specifically a symbol or two of interest, and then I can give you one that, you know, that you're familiar with, that you actually care about. And just let me know the symbols you watch, just a couple, and I can send you over a couple of examples. Sorry, Alex. Alex says he just can't hear anything. Okay. Well, it looks like, let's see here. If there's anything else anyone wants to know, I guess go ahead and just email me. There's my contact info.
All right. It looks like you got one other comment, Jared. I'm going to go ahead and wrap this up right now. We want to give a special thank you to Jared Putnam of TradingSUPRA for a great presentation today. NinjaTrader Ecosystem is pleased to sponsor these weekly vendor events as a value-added service for our clients. So if you find some value in these events, we hope that you will attend on a regular basis. We just want to remind everyone the information that was provided today is that of TradingSUPRA and not of NinjaTraders. All information was for educational purposes and should not be construed as trading advice. Again, we appreciate the time you spent with us today. Please enjoy the rest of your day. We hope to see you again in future webinars. Happy trading from all of us here at NinjaTrader.